Welcome to episode. Did I really forget what episode this is? Oh, episode 4. Anyways, welcome to episode 4 of the Trifecta's Arcana. In this episode, I'm going to be showing you the second epitome, also known as the Deceptive Foresight. The Deceptive Foresight model is when one side of liquidity is being purged of an accumulation range and another side is generating liquidity. So here, I'm going to show you that. So let's see. As you see with this accumulation range here, you see how one side of liquidity is being built up down here? Right there, in between these lows. See how there's liquidity being built up here, but there's being a purge of liquidity up here? See that? See these highs getting broken? Look at that. So one side of the range is being broken or being purged while the other is generating liquidity. So since we see one side getting purged, we want to see a run on the other side of the range. And that run on the other side of the range is what we want to catch. So let's see how we could have caught that, right? So we know that this side got purged, so we mark this as liquidity purge. And if we look here, what we had was we had a change of state of delivery. Look at this. With this order block here, if I can draw this out, order block with the fair value gap here. And don't worry, I will be making a video on change in state of delivery soon. It is coming because I'm just now noticing how overpowered change of state of delivery is. So for the ones that were wondering, like, what the heck is change of state of delivery? It's coming, I promise. It's very much coming. But anyways, let's place our short position. And you could have set your stop right here at the top of the fair value gap. And then held it all the way until you saw some sort of like indication or some sort of willingness to go higher. Let's say you saw it around this candle's low, and that's when you got out right there. So that would have provided you an easy 3RR with the Deceptive Foresight. The Deceptive Foresight, I think, is definitely the easiest epitome. And remember, these epitomes form everywhere. There's no like certain kill zone, certain macro. They form everywhere, okay? They form everywhere. They form on every time frame, on every single asset, okay? Because it's simple. You're using simple price cycles. It's just a price accumulating, then it getting volatile, and it manipulating. That's all we're trading. But all I did for you was I amplified it so you can trade it easier. That's all I did. All right, so here we are with the second example of Deceptive Foresight. So as you see here, I have this fair value gap marked out for later, but we can delete that. Let's not spoil it for you. So as we see here with this accumulation range, which side of liquidity of this accumulation range is being purged? If you said buy side, you are correct because the highs of the accumulation range are consistently being purged, creating higher highs of the accumulation range. So you can say purge and then another purge here. Boom. So we obviously know that the buy side of the curve is being purged. Now, what's the sell side doing? Oh, it's just chilling here. It's just, generating liquidity. Just sitting here generating liquidity. So since we know that we have a purge of buy side, or the buy side of the curve is being purged, we want to see a run past the sell side or the generated sell side that was accumulated during the accumulation range. And how we could do that is, let's see what we could have used to get our entry in. So let's zoom in here in this area because I already see a setup. So if we look after this last liquidity purge, what do we have? We have a break of structure within this swing low. Yeah, break of structure. And then we could have used this fair value gap right on there. That on fair value gap. Boom, once it came up to it, could have took a short. Say your stop at the top of the fair value gap. And then you exit when there's a lack of displacement, which was, Jesus Christ. Lack of displacement was about right. I have no idea what the lack of displacement is, but the lack of displacement was about in this area. So once you, right about in this area, that would have gave you a solid 12 RR. Look at that. 12 RR. Isn't that amazing? So if you risk 1%, you would have made 12. Crazy. If you would have risked 2%, you would have made 24%. Jesus, isn't that insane? If you risked 3%, you would have made 36%. That is outrageous, isn't that? But those are, I'm not going to brag, but those are kind of not too bad of numbers for me because I trade an actual live account. I don't do prop firms. But I'm sure for you guys risk like very tiny percentages, like 1 to 2% and stuff like that. And your percentage gains would be like 3, 4 to 5%. So I understand why that is because, you know, the rules with prop firms, oh, the consistency rate, blah, blah, blah. Okay, what am I yapping about? Anyways, next example, roll the clip. All right, so here we are with our, I have no clue what number example this is, but I'm guessing it's 3 or 4. You can go back to the video and see what number I'm missing. But anyways, with this example here, there's actually 2. So this might be literally 3 and 4 actually. I'm just now noticing. Because as you see here, we have, I don't even have to say, I'm just going to explain, okay? First, we're going to do this accumulation range here. So, obviously, without even, with just eyeballing it, we see that the sell side is being purged. The sell side of the range is being purged. So we can mark this entire thing as a what? As a liquidity purge. Yeah. Then we can come back around and mark this as an accumulation of buy side. So what we would want to do is we would want to see some sort of indication or some sort of a willingness to go higher. And we did have a break of structure displacing above it, above this swing high. And we could have waited for a retracement back into a fair value gap that was within the range of the break of structure, which was this one here, boy. Oh, I didn't even select the fair value gap thing. There's the fair value gap. Once it came to it, could have took some buys right about here. Set your stop right there at the low of the fair value gap. And then you could set your target right there at the high of the range, or whenever there's like some sort of willingness to go the opposite way. But if we set it here, that would have easily gave you a 6 RR. Look at that. Impressive, isn't it? Now, the second explanation, or the second explanation of the third, I don't know, the second half of the third explanation. I can't really explain it, but it's another example of in the same area basically, which will be right about here. So if we zoom in here, we see how price is accumulating, right? See how price is accumulating here? And you see how we have this purge of liquidity. Price is just purging liquidity. The buy side of the curve is being purged while we have an accumulation of what? Accumulation of sell side. Yeah. So since we see an accumulation of sell side, we would want to look for a run below these lows. We already broke the lows, creating a break of structure, but now we want to look for an entry to have a run below these lows. We could have took this fair value gap right on there, pull that out. Could have took your sell there, right there at the fair value gap. Have your stop at the top of the fair value gap, and then drag it all the way down until there's a lack of displacement, which would have been about here, logically, but you can hold it into the next session, which would be Asian session. I mean not Asian, but London here. You can hold it into the next sessions and continue holding into the next day if it's going into the next session, based off what time you place a trade. But anyways, if you were to call this whole move until there's a lack of displacement until about right here, I'll pull it over, that would have gave you a pretty good amount of 12 RR. Look at that. Very impressive. So 12 RR for this trade here. So 6 RR for the bullish example and 12 RR for the bearish. For some reason, I'm noticing whenever I do bearish examples, the bearish examples or moves in general within a market, they're naturally just more powerful. I don't know if anybody's noticed this, but the bearish moves are naturally just more aggressive. I don't know what's up with that. I don't know what's the analogy behind that, but I've just always known that. Okay, anyways, enough of me yapping. Next example, roll the clip. All right, here's our next example of Deceptive Foresight. I think this is our 5th example now from the other 2, that was in the same area. But here with an example, Jesus Christ, within this example, you see that sell side is being purged of the accumulation range. So this would be a liquidity purge right there. And then we have a what? We have an accumulation of buy side, and we want to see this get ran through since we have a purge of sell side. Okay? Now, since we know that, let's look for a confluence or a willingness or some sort of confluences showing a willingness that price wants to go above and beyond these highs. So we do have this order block that formed right about here. We do got this order block. So when price came back down into it, you could have took buys. And then we had this break of structure here. I think at the swing high. Is this swing high? Let me see. Yep, at the swing high. Confirming a break of structure after the liquidity purge of the accumulation range. And then that order block would have been your entry. And that would have been a pretty good entry, if I do say so myself. And let's put on our long position so we can really see how good this looks. So if we drag it over, then we set our stop right at the bottom of the order block, and then got out whenever there was a lack of displacement, which is about here, you would have made about 2 RR. So pretty good. 2 RR. Hey, it's not too bad. The marionette does form here. That's why we didn't get that much of our RR this time, because the marionette did form. The marionette does cut off your RR, because the marionette, it's very manipulative, and it sets up for its original move. So that's the reason our risk to reward got cut to 2.1, because the marionette was doing its job, and that's why we had this crazy run up. But you will be learning about the marionette in the future. It is a very high skill epitome. But I think this will be the last example I'll be doing of Deceptive Foresight. I hope I gave you a good explanation or a good detailed rundown of this epitome, and I hope you go back test it. Actually, I'll give you some homework. Go to TradingView or Traders Casa. It's a replay platform that one of my Discord members showed me, and it's an amazing platform. I recommend you go check it out. It's called traderscasa.com, and you can use it for free replay mode, and you can backtest the Cunning Catalyst, the Deceptive Foresight, whatever you want to backtest. And go backtest it, make sure you see it, and if you see it, come back for the next episode. But anyways, enough of me talking. I'm sure you've heard enough of me yapping by now. But let me go ahead and end this video here. I've been talking for 16 minutes and 36 seconds. See ya.